Hi, hey, this is Ron Janish. I'm going to talk to you a little bit about risk management using Andrews techniques and why I think Andrews has a huge advantage for that kind of stuff. Okay, um, this account here is the what I call the demo account or the corporate account. This is real money, no BS, nothing like that, and it shows you the number of positions we presently have on. And notice that it's like ones in all these things here, and this is one I'm thinking of buying. But it's like ones in all these things here, except for this one here where I have a bunch. And we're going to talk about that in a moment. And notice in this one here, now this one has a few more things in it. This one, this is, first of all, this account here is Thinkorswim, and this one here is a personal account over at IB. And on this one here, you can see the losses. These are the losses in the last 24 hours. Notice MXN JPY took a small loss, took a loss in AUD, took a loss in JPY. Okay, these are examples of actual losses. And notice that the losses aren't humongous, and whereas the actual positions, which aren't really big except for this hogs thing that we'll talk about in a moment, these are relatively small, ones and twos. I think the only one I have a two in is TF, which is the Russell. So now reality is that this account is up nearly 10% for the year. Fact is, this is the 4th of January. How long has the year been? Nearly a day. Okay, so that's really a spectacular day, and that's really kind of neat. And so one of the things that Andrews really pushed was the idea of not over trading, even though his examples in his demonstrations showed he just put a ton of money on positions and stuff. I would suggest keeping things to a minimum, to a nice manageable level where you're not stressed out if the market goes in an unfavorable position. I don't want to use the words against you, but in a manner that is not necessarily favorable for your account. Okay, so let's move on to, first of all, let me get out of this. Okay, let's move on to the market itself. Let's see some specific examples. Now, right now, we're two really simple examples are in the hogs and in the sugar. Now, notice that here. Let's take a look at the hogs. Okay, notice the hogs here, and you can count. You've had 1, 2, 3, 4, 5, 6. I think it's like 6 or 7 higher closes in a row. Went right up to the MLH line. And that's, originally I wound up going short here. And then, with prices going up to this line here, it was just too tempting. Wound up putting on a bunch more shorts. And then I wound up adding some more shorts this morning. So while I have a higher number at risk, I think we have a really good chance of hitting or beating this particular low here. Okay, and based on the course methods. Why? Well, notice here that you have a nice, powerful zoom to the downside. And then you have a retrace back up to the MLH. And so the theory is it's going to go down a bit more. Now, will it go down fast? I don't know. No idea. Might go down fast, might go down slow. We'll have to wait and see. Okay. Notice that the overall trend here is definitely not up. So we're staying with the longer term trend. We've got a nice zoom to the downside, retrace back up, and it gets up here. I don't know if I want to take much heat up here. So I'd rather that it continue to the downside. Let's take another look at another one that's kind Let's see. Um, yeah, let's take a look at this one here. This one's kind of neat. Now in this one here, it wound up getting short here, and it wound up making a little bit of a higher high, giving everybody else an opportunity to get in over a week later after I already went short. And I did not put on additional short positions here, even though I probably could have. So what happens is since I only had one position on, and it wound up going sideways and sideways and uppish and uppish and uppish and sideways. Uh, yeah, there was some additional heat, but since we wound up getting short right near the extreme, that's why it wasn't as bad, as uncomfortable as it might be otherwise if it was a losing trade. Okay. So, and that's one of the things I want to, the reason I really, really like the Andrews techniques, and I've been using this stuff for a very long time, is that it can help me to find points of entry that are very close to the extreme. Now, we wound up getting in here, and yeah, it wound up going up here again, okay, and giving somebody else an opportunity to get in at a better price, and that's going to happen. But if I can find many of the reversal points, then then to be uncomfortable in a trade is minimized, okay? And we wound up doing the same thing in the hogs. Let's see, where is this? Hmm, that's no wonder it's the wrong one. HEG6. There we go. Okay. Wound up doing the same kind of thing in the hogs. Wound up getting short up here somewhere. And so there was a lot of heat that I wound up experiencing when prices went back up because the profitability of this move here was just really cool. And I wound up staying on the short side, just staying in with it. And right now we're over here. We added a bit more, thinking that probability is pretty good that the downtrend is going to continue. And we'll just have to wait and see. Okay. Here's the bonds. Nice example. We wound up getting long right around over here. Yeah, I bought it 153.12. And as you can see, prices wound up going a little bit lower, 224, and a little bit lower the next day again, where people were able to get in at a better price than what I did. But I didn't wind up taking a lot of heat in terms of a negative position in my account. And now things are working to the benefit. Okay. So, and the thinking is that the long-term trend is up here, and this has a good shot at continuing to the upside. So this is to give you some idea as to why I prefer the Andrews techniques. And yes, by the way, I do teach the Andrews course, and to get that, you just go to www.andrewscourse.com, and let's take a look. Whoops, wrong one. This is the andrewspitchfork.com page where I wind up kind of predicting sometimes what's going to happen. See, this is what I had over here the other day. Put this one up, and this is what's happened today. Okay, let's see. There we go. There's the Andrews course page. And here you just click on products and you can see the different things that we have to offer. So that's up to you. What you'd rather pick to start with, we usually recommend the Andrews Advanced course, and you can get that using PayPal or your credit card, whatever you like. And we still offer that today. Um, we also have an expanded course and a pro course. Pro course is very, very limited. Hardly anybody gets to take that. It's anything but cheap. And what we do in the advanced course is show you the techniques that I use, and I regularly show you videos of what's going on in the market, in my opinion, and what kind of tools I'm using, which are straight out of the course manual that you wind up getting. And that's what we do. So I thank you for your time and wishing you a happy new year. Till next time.